Welcome to Kenya Market Daily Podcast. Today we're taking a deep dive into the vibrant and really dynamic world of the Kenyan financial markets. We've got a stack of fresh reports and analyses right here, giving us, a real-time pulse on what's truly moving the needle.
Absolutely. And our mission for this deep dive is basically to pull out those crucial nuggets of knowledge, help you quickly grasp the most important insights from today's market activities.
Yeah.
We're especially focusing on some of Kenya's biggest players, think Safaricom, Kenya Power, the major banks,
Right.
along with those broader economic signals. We really want to make sure you're not just informed, but properly well-informed.
Exactly. So you'll walk away from this deep dive with a much clearer picture. We're talking key company performance, Nairobi Stock Exchange projections, and even how, global events are quietly influencing local trends right here in Kenya. So
Yeah.
as we dive into these sources, what immediately jumps out at you from today's activity?
Well, the first thing really is the Nairobi All-Share Index, the NASI. It clearly flashed green today, jumped a solid 1.7% to close at 148.50.
Okay, 1.7% up.
Yeah, and this isn't just a number. It kind of suggests a broad wave of investor optimism across the market.
Sure.
Signals some strong underlying confidence, maybe particularly from institutional players. They tend to drive these big moves.
Right, the big money. So that's a positive headline. But let's break that down. What was actually driving this upward momentum? Which companies were the real engines here?
Well, the performance was largely driven by gains in what we call large cap stocks.
Mm-hmm. The big ones.
Exactly. The biggest, most established companies, the ones that really move the index. So we saw NCBA Group, that was up 1.8%, Equity Group by 1.3%, Standard Chartered Bank 0.9%, and Safaricom edged up 0.4%.
Okay.
But, it wasn't universally positive. This bullish movement was kind of weighed down a bit by some modest losses in other individual stocks or counters, like BK Group Playa, that declined 1.7%, Tecini Play down 0.7%, Williamson T. Kenya 0.5%, and Burnham Holdings was off 0.3%.
So a bit of a mixed bag then, but the heavyweights pulled the average up.
Pretty much, yeah. The big players definitely had an outsized impact on the headline numbers.
Okay, so we're seeing some familiar giants pushing the market up, but what about the overall trading activity? I mean, did investors participate as much as that positive index might suggest? Or was it a more cautious day?
Yeah, that's interesting. Not quite as enthusiastic as the index might imply, actually.
Oh.
Trading activity, it dipped quite sharply today, down over 26%.
Wow, 26%.
Yeah, settled at roughly KES 232.71 million. That's down from about KES 315 million in the previous session.
That's a big drop, over 80 million KES less changing hands.
Exactly. So it does raise an important question, right? Despite the index going up, why the significant drop in volume? It suggests maybe some caution or a sort of wait-and-see approach from many investors. Perhaps hints these gains might not stick without broader participation.
That's a really interesting divergence. Okay, and how about foreign investor participation? What were they up to? Buying? Selling? What does that tell us?
Well, connecting this to the bigger picture, foreign investors were actually net sellers today.
Net sellers.
Okay, meaning they sold more shares than they bought. This led to net outflows totaling KES 35.53 million. So money leaving the Kenyan market, basically.
Right.
And that's a pretty significant shift, especially considering they had net inflows of KES 55.58 million just the day before.
So a complete turnaround there.
Yeah. Overall, foreign participation today accounted for about 29.4% of the market. Local participation was quite strong at 70.6%.
Okay, so local investors were clearly driving the activity, even if the overall volume was down. Makes sense. Now, beyond the NASI, what about the other key Nairobi Stock Exchange indices, like the NSE 20 or NSE 25? Did they follow this bullish trend too?
Yes, they did. The other indices also showed positive movement. The NSE 10 index was up 0.5% at 1,469.98. The NSE 20 index, that rose 1.1% to 2,318.17, and the NSE 25 index gained 0.6% to finish at 3,818.82.
Okay, so broad gains across the main indices.
Exactly. And the trend charts we have confirm these indices have generally been on upward paths since earlier in the year. That certainly seems positive for overall market sentiment and, maybe projections in the short to medium term.
Right. Now, here's where it gets really interesting for you, our listener, because you specifically highlighted these companies. Let's zoom right in on Safaricom, Kenya Power, and the major banks, Equity, NCBA, KCB, Co-op Bank. What do these reports tell us about their individual performance today? And crucially, their prospects?
Okay, yeah, we have some pretty clear insights here looking at the top traded companies by turnover. Safaricom was the most active counter today, clocked in KES 52.12 million in aggregate turnover. Its closing price was KES 24.15.
52 million. Okay.
Then Equity Group was the second most traded. That was KES 41.60 million turnover. Closing price KES 47.0. And KCB Group came in third with KES 40.76 million turnover, closing at KES 44.45.
So those three were really driving the value traded.
Absolutely. Definitely the giants pulling significant activity, both volume and value today.
So these are the heavy hitters attracting the most money. But what about specific recommendations from the analysts? We're talking buy, sell, or hold. And more importantly, why? We need to understand the reasoning.
Right. This is where the deeper analysis comes in. Let's start with Equity Group Holdings Panic. The strong recommendation here is a BUY.
A buy for equity. Okay.
Their current price is KES 46.50, but the target price is set at KES 57.05. That represents a pretty impressive 22.7% upside.
Wow. Okay. Nearly 23% upside potential. What's behind that?
Well, the reasons cited are quite compelling. Their insurance business, for one, is seen as exceptionally well-positioned for growth. Look at this, a massive 43.0% year-on-year increase in insurance revenue.
43%. That's huge.
It really is. Plus, the bank is expected to benefit from a reduced cost of funds, which should lower their overall interest expenses.
Yep.
And their growing non-banking business is projected to significantly lift overall margins.
Okay. So diversification and lower costs.
Exactly. Add to that a progressive dividend policy, strategic expansion initiatives. You can see why they expect loan book growth and new customer acquisitions to really pick up.
Makes sense. What about NCBA?
Similarly, NCBA Group PLOOK also gets a strong BUY recommendation.
Another buy. Okay.
Current price KES 39.01, target KES 57.00. That implies about a 12.5% upside.
Still decent. And the rationale?
Well, NCBA is seen as poised for top-line growth, especially with the recent start of operations in NCB Insurance. So, again, insurance is a key factor.
Right, that diversification theme again.
Yeah. They're also seeing increasing returns to scale from expanding their digital presence across East and West Africa. And like equity, a lower cost of funds, likely driven by declining interest rates, is expected to give a significant boost to their overall margins.
Okay, clear parallels there. Now, what about Kenya Power KPLC?
Right, for Kenya Power KPLC, well, we don't have a specific buy, sell, or hold recommendation from one of our main sources right here. It definitely stood out as a top gainer today.
A top gainer. By how much?
Its closing price hit KES 9.68. That's a significant 6.8% increase just today.
Okay, nearly 7% in a day. That'll get noticed.
For sure. That kind of daily gain certainly puts it on the radar for many investors.
And Cooperative Bank. You mentioned them briefly earlier.
Yeah, Cooperative Bank of Kenya.
Mm-hmm.
It was noted in that foreigner sales data we talked about. But a specific buy-sell hold recommendation with detailed reasons isn't provided in the current reports we're looking at right now. So less visibility on the analyst view for Co-op today.
Understood. So really positive outlooks for equity and NCBA, driven by insurance, digital, and cost management. KPLC showing strong price action. But, we also saw some other news related to the broader banking sector in our sources, right? Things that go beyond just stock performance, hinting at the systemic landscape.
Absolutely. That's a really important point. While it's not directly a stock recommendation, it's critical to note the situation with National Bank of Kenya, NBK.
What's happening there?
Well, the High Court has ordered NBK to pay 8 customers a cumulative $711 million.
711 million. Why?
For illegally selling their land parcels down in Malindi after some kind of botched sugar importation deal.
Oof. That's a significant amount.
It is. Now, NBK intends to appeal the ruling, but it definitely highlights a major legal challenge they're facing. And, that's a considerable sum for any bank.
Definitely something to watch. And what about KCB Group and Equity Bank from a broader perspective, beyond their stock prices today? Any other big developments?
Yeah, there are some critical points here, particularly around systemic risks and debt. Equity Bank Kenya Limited, for instance, was the main creditor that just seized shares of TransCentury and its key subsidiary, East African Cables. That was effective Monday.
It seized shares. Why?
Due to defaults on $4.7 billion in loans.
$4.7 billion. Wow.
Yeah. And this action has led to a massive combined loss of over $14 billion for the original owners of those companies. TransCentury's last stock price was like $1.1, reflecting a staggering 97.7% capital loss for the founders before equity stepped in, basically wiped out shareholders.
That's brutal. Shows the real consequences of debt defaults. What about KCB?
For KCB Group, there's news involving the National Oil Corporation of Kenya. or not. NOG is set to receive Sh3.38 billion from the Petroleum Development Levy, specifically to settle loans owed to KCB Group.
Okay, so government levy money paying off a state Coors bank loan.
Exactly.
Yeah.
The initial NOC loan from KCB was Sh4.69 billion, and apparently it's grown to Sh7.53 billion with interest and penalties, presumably.
Nearly doubled.
Yeah. And Naudex is also settling debts with other fuel suppliers, plus they have a separate loan from Stanbic Bank. So KCB is getting a significant chunk back via this levy allocation.
So it's really complex, isn't it? These banks are seeing positive growth signals and analyst buys, but they're also deeply involved in navigating these major debt recovery situations and some pretty complex legal landscapes. That's a really critical piece of the puzzle for anyone watching Kenya's financial sector.
Definitely. You have to look beyond just the daily stock ticks. Now, moving from the micro level of individual companies, let's zoom out again to the broader economic picture. What are the government's financial plans telling us? Well, the National Treasury is seeking Sh50 billion from the first bond sale of the upcoming 2025-2026 fiscal year.
50 billion. Okay, first bond sale.
And this is just part of a much larger plan. They're targeting borrowing a substantial Sh635.5 billion from the domestic market overall for the year.
Whoa, 635 billion from the local market. That's a huge target. Let's delve into that. What kind of bonds are they offering, and what does this borrowing strategy tell us about, the government's finances?
Okay, so they're reopening a care of long-term bonds, or papers as they call them. There's a 20-year bond, which actually has about 12.8 years left until maturity. It comes with a coupon, the actual interest rate paid of 13.2%.
13.2%.
And then there's a 25-year bond with 18 years left to maturity, offering a coupon of 13.4%.
Okay, so long-term debt at fairly high interest rates.
Relatively, yes. And this borrowing is aimed at financing a projected budget deficit for 2025-2026, which is set at Sh 923.2 billion.
923 billion deficit. How does that compare?
Well, what's interesting is that this projected deficit is actually lower than the current fiscal year's deficit, lower by about Sh 74.3 billion.
Huh. So a massive borrowing target, but the deficit projection is actually shrinking slightly compared to now. This also connects to all that talk about government spending cuts, right? How is that actually playing out?
Indeed it does. And it's a bit complicated. Despite President William Ruto's pledge early on for brutal cuts in recurrent expenditure.
Right, the day-to-day spending.
Exactly. And there was an initial Sh40.51 billion reduction signaled back last July. But subsequent budgetary reviews have actually seen allocations increase by nearly Sh 176.45 billion.
Increase. So wait, they cut 40 billion, then added 176 billion back.
Essentially, yes. It pretty much negates those promised spending cuts, especially following the withdrawal of the Finance Bill 2024. So while the overall deficit projection is a bit lower, the actual recurrent spending isn't really aligning with those earlier pledges. That's a really key point for anyone tracking fiscal discipline.
That's a really significant development. So, okay, they need to borrow a lot. What about the fixed income market itself? Was there strong demand for bonds today?
Not particularly, based on today's numbers. Secondary bond market turnover, that's where existing bonds trade, decreased quite notably, down 45.2% today.
45% drop in turnover.
Yeah, it's settled at KES 13.84 billion, down from over KES 25 billion previously.
Okay, so less activity there. What about interest rates on T-bills and things?
The key short-term rates, like the 91-day, 182-day, and 364-day Treasury bill rates, they all saw minor declines. Just small dips. On the other hand, the interbank rate, the rate banks lend to each other overnight, that increased slightly.
Okay. And just as a sideline, speaking of broader indicators, how did the shilling do today? Any currency movements that might impact the market?
Just minor movements, really. The Kenyan shilling saw slight declines against the major global currencies. Traded at about 129.29 against the US dollar, 150.2 BO against the euro, and 176.13 against the sterling pound.
Okay, small shifts.
Yeah, relatively small day-to-day, but they reflect that broader currency landscape, always worth keeping an eye on as they affect import costs and, overall economic stability.
Right. So putting this all together, what does it mean in the broader global context? Are global markets influencing us much, or are we influencing them? How does it fit?
Well, the global market summary we have shows a bit of a mixed performance overall, but there's a generally bullish sentiment still evident in the U.S. markets. The S&P 500 rose 1.1%, the Nasdaq climbed 1.4%. That's extending gains from the previous session, partly linked to news about a ceasefire between Israel and Iran, maybe easing some geopolitical tension.
Okay, positive sentiment in the U.S.
Yeah, and you see strong performance in tech and semiconductor giants like NVIDIA and Intel globally. That's not just an abstract number. It hints at this broader investor appetite for growth, for digital transformation, trends that could, indirectly boost investor confidence in Kenya's own tech leader, Safaricom, even though its gain was modest today. It sets a positive, albeit indirect, backdrop.
I see. So even if the direct link isn't obvious, the global mood matters.
Definitely. However, European markets kind of diverged from the U.S. trend. The UK's FTSE 100 declined slightly, 0.2%, and Germany's DAX dropped 1.5%, maybe reflecting different regional economic worries over there.
Okay, so Europe lagging a bit. What about Asia?
Asian markets, on the other hand, mostly mirrored the U.S. movements.
Hmm.
Japan's Nikkei 225 gained 0.4%. China's Shanghai Composite edged up 1.0%.
Okay.
So it's this mixed global picture, right? It suggests capital might be flowing quite selectively towards specific sectors or regions based on perceived growth potential and stability right now.
Makes sense. And any other standout global companies making headlines? Anything that offers a glimpse into broader industry trends for you to consider?
Yeah, a couple of things. We mentioned NVIDIA up 2.6%, Intel up a strong 6.4%. That really highlights the strength in tech and semiconductors.
Right.
On the other hand, Tesla Inc. saw a decline of 2.4%. So not all tech moving together. We also saw buy recommendations globally for companies like Broadcom, Warner Bros. Discovery, RELX, while others like AIG and Visa were on hold. And each of those has specific underlying reasons tied to their own business performance, market conditions. Things like strong revenue growth or maybe a robust underwriting business in AIG's case.
Got it. So specific company stories playing out globally too.
Exactly. And what's truly fascinating, I think, is seeing how all these interconnected layers, from individual company strategies like equity pushing to insurance, to national fiscal policies like the Treasury's borrowing plans, and even those global geopolitical events, how they all contribute to the daily fluctuations and the longer-term trends we see right here in the Kenyan market.
Yeah.
It's a really complex dynamic system. Everything kind of influences everything else.
It absolutely gives us a much more complete picture of where the market stands today. You can really see the resilience in certain sectors, like the banks adapting. You see the strategic positioning of key companies, but also those ongoing challenges the government is navigating on the fiscal front.
So wrapping this up, what does this all mean for you, the listener, as you consider these dynamics? Maybe thinking about your own financial decisions or just staying informed.
Well, I think it raises a really important question to chew on, maybe. How might the government's continued quite large borrowing targets and those shifts we talked about in its spending strategy especially, not quite managing those anticipated cuts, how might that influence the very companies we've discussed today, Safaricom, KPLC, the banks, and in turn, the broader investment landscape in Kenya over the coming months?
That interplay between government finance and corporate health.
Exactly. It's a complex interplay, and it's definitely worth mulling over, particularly as you look ahead. Fantastic insights. This has been a truly comprehensive deep dive into today's Kenyan market activity. Really appreciate you breaking it all down. And for you listening, if you want to keep up with these essential market insights and stay well informed, make sure to subscribe to the Kenya Market Daily podcast wherever you get your audio. And please do follow us on our social channels. They're linked right there in the podcast description. You'll find more updates and discussions there. Thanks so much for joining us for this deep dive.